Let's start off with this.
Yeah.
Are you a believer in the Santa Claus rally? What do you make of the fact that we're pretty much flat over that period right now?
It's early. It's something my father invented back in '72. It's in the '73 almanac. Believer in it as an indicator, yes. And the fact that the last 5 days of the year, the first two of the new year, are a bullish period. It's when, not everyone's around. People are buying up stocks, making new lows and bargain stocks and stuff that was sold for tax loss selling. So I'm a believer, but it's really an indicator. It's not just a rally to trade. It's something we need to look at. And if Santa Claus fails to call, bears may come to Broad Wall, as my father said and coined that phrase back in 72.
You're a poet. You didn't even know it.
No, it's him. No, it's a poet. But it's only a may come. It's something, it's a flag. You start to look at other indicators combined with our January barometer, which also was invented by Yale back in '72. And the first 5 days of the year gives us our January indicator trifecta. All three hit the first 5 days of the trading days of the year, the Santa Claus rally that you mentioned, which you got right. And the full month January barometer for the S&P is up 90.6% of the time, 29 to 32 years, for an average gain of 17.7%. So hitting the trifecta, pretty good for the market.
All right, so that's something to watch for. So we got to see if we get that Santa Claus rally first to get that trifecta.
A few days left.
All right, I want to talk to you about the full year of 2026. Sure. A lot of talk about the fact that there's no strategist out there who are bearish about next year. Everybody's bullish about it. A lot of talk about that. I want to hit you with something else. Sure. We had a guest yesterday that gave us a great stat. Second year of a presidential term, obviously.
Yep.
Next year is President Trump's second year. The average gain on the S&P is 3.3%. But you're looking at a different trend. The sixth year of a president's term, even though obviously President Trump's terms are broken up between President Biden's presidency and in between, you're still looking at that trend of the 6 year. Now, what happens on a 6 year when it comes to the markets?
Well, the president's really trying to cement their legacy. It's kind of like a pre-election year of a regular term where they're really trying to push as much through as possible to make the people happy, to cement their legacy, to keep their party in power. And, we've seen a president that's pretty hands-on and interested in his legacy and how he's perceived, and I see that happening here. All of the worst-case scenario, fallout from the policies and tariffs have not materialized. Things are looking pretty well. Just look at GDP, look at the stock market. It's pretty robust. We made a couple more new highs here for the Dow in December. That's 20 this year. So it's one of those years where you're looking at somebody who's doesn't have to worry about what getting reelected. They're just doing everything that they can to keep the market and the economy moving along.
You sound very bullish, but you say there's going to be a lot of volatility in Q2 and Q3. What's the cause in your mind? Is there a historical precedent to have that volatility in Q2 and Q3? And then what leads us to the rally in Q4? Because you're also calling for that. So what's the problem? How do we fix it? And how do we go higher?
Well, I mean, you've got your usual seasonal weakness during the weak summer months, the Salome period, the worst months of the year, May through October, where people tend to do other things and get outside and get away from the market. And then you've also got the midterm elections themselves, which tend to take attention away from economics and the economy. And again, with this current administration, this current president, been known and shown himself to get involved in down ballot elections, and that's what can happen in the midterm year. So you see that weakness. The incumbent president's party tends to lose seats in the midterm year, so we've got a very thin margin in Congress. That becomes a fear. Markets do better under Republican Congresses. That's a whole other story. But and then Q4 rally. Yeah.
So you say August, October is the best window to buy stocks, right? But that's right before the midterms. You're also, I'm looking at your notes, you're not counting in a possible shutdown, tariffs being overturned. So does this trend stay the same? August, October is the best period if we see some pretty big macro things, government shutdown, the possibility of tariffs being overturned, or does that kind of break in your mind the historical precedents and the pattern that you're seeing?
Well, I mean, that's where the fear of what's going to be the outcome of the midterm elections start to happen. Market's an anticipating mechanism. It's going to go down ahead of the elections. And August, October is that weak seasonal period anyway. Didn't happen this year, which is a bullish sign in my view. So that sets up this Q4 rally. And the sweet spot of the 4-year cycle is Q4, the midterm year, to Q2, the pre-election year. Dow and S&P up 19 and 20%. NASDAQ up almost 30, 29.3%, I believe, from Q4 of midterm year through Q2 of the pre-election year. You get that 50% move possible. NASDAQ does from the midterm low to the pre-election year high about 66%. So it's just set up. I mean, Q4 is where all the rallies happen. we've seen that so far this year a bit. I mean, there's some profit taking. We've come off of a big AI tech boom year, but I don't think that's going to change. I don't think the AI super boom is over just because the calendar turns.
All right.